Okay, we want to welcome you. My name is Jennifer Young and I'm with University Credit Union, and we want to welcome you to our first-time homebuyers webinar. Joining me today is Taylor Riley, one of our mortgage consultants. And we apologize, we're a few minutes late getting started, but I'm going to ask a favor. Can I have one of you type in just a quick question to let me know that we had some technical difficulties at first, and so could I have one of the attendees just type in a message? Or raise your hand, something like that. Just making sure that we can be heard.
I think Carl
there
just
we go.
Bingo, we're in. Okay, thank you so much, I appreciate it. So today's webinar, there's a few housekeeping items just quickly. If you do have questions, just like what I asked you to do, type those questions in the question bar and we'll address those periodically throughout the presentation. Today's presentation is primarily for first-time homebuyers, and we're going to be addressing some new programs that we've come out with here at University Credit Union, as well as the process that you can expect as a first-time homebuyer, what you can anticipate from a lender's point of view, what you can anticipate from a real estate agent's point of view, just the overall process. So hopefully this will be information that will be beneficial for you. We're going to go ahead and dive right in, and again, encourage you, if you have questions, go ahead and ask and we'll answer throughout the presentation, but we're going to dive right in and get started. So at the credit union, we have all sorts of different programs available to you, including but not limited to conventional, FHA, VA, fixed rates, adjustable rate loans. We also offer an array of short-term mortgages, as well as construction loans and jumbo loans. Those are pretty much all that you'll be needing throughout the process of purchasing a home.
Today we're going to talk about if you're ready to buy a home and what to expect through the process. We're going to talk about the application and how we go through the pre-approval process, helping you find a home, submitting a formal application and getting a formal approval, going through with appraisal and title work all the way to closing so that you can be in your new home.
So there are a lot of variables that affect your payment when you're purchasing, and some of those variables include obviously a down payment. The more that you put down, the better interest rate you're going to have and the lower your payment's going to be overall. But if you're looking at purchasing a home that falls into an HOA, which is a homeowners association, we want to make sure that you're prepared for what those payments are going to be, as well as what your mortgage payment is. So we want to make sure that we're covering all that you can anticipate throughout the process, and when you finish, what your payments are going to be. If you look at a condominium, most condominiums have HOA fees as well. We're also going to cover information on PMI. PMI stands for private mortgage insurance. We're going to explain to you what that is and kind of the variables behind that. Property taxes and homeowners insurance are two things that also affect your overall payment. Now you're in charge of the homeowners insurance in finding who you want to work with, what agent, what company, and then just relaying that information to us. we don't govern that information. It's just up to you to choose. And then the biggest variable on your payment would be your credit. Credit has the single biggest impact. It determines what your interest rate is. It determines on how much you're allowed to put as far as minimum down payments. It really is a big variable to your overall payment, and we're going to address that a little bit later.
Okay, we're going to talk about how much your credit score affects your private mortgage insurance. One of the other things that can be able to affect your mortgage insurance is your down payment. When you go through with the different down payment options that we have for you, with 3%, 5%, 10%, 15% cash down, there's a mortgage insurance rate that goes along with your credit score and how much cash you are putting down. When we go through and we talk about how much the payment is going to be, and Jennifer talked about how much your credit score affects that, the mortgage insurance premium is based on all of those factors. So what we're looking at is if you were to put 3% cash down and 5% cash down, and you can see what starts to happen with the mortgage insurance premiums as your credit score decreases. And once we get to a certain point of the credit score decreasing, it starts to bring in different types of programs and products that are available for you. FHA has a fixed mortgage insurance rate for everybody. And so when we start getting into the 3% cash down, you see the premium at 680 credit, or excuse me, the 680 credit score at $300 a month. We look at other programs that can be a lot more beneficial for you. So you can start to see how important your credit score is when you're looking in the home buying process.
So this just gives you an idea. With the credit union, you actually get preferred pricing with the private mortgage insurance companies. And this gives you an idea if you were to go with anyone else on just a regular purchase price, $265 we used with a 5% down with a 740 or better FICO score. Your mortgage insurance with someone else would be $125. And with a credit union, because of the preferred pricing, it would be around $92. Now that additional savings gives you the ability to actually purchase more. So this is a really good example of what membership, the benefits of membership with a credit union offer.
In addition to your down payment, additional items to contemplate would be the closing costs. If you're buying a new home or buying a current home where the fridge is not included in the purchase, sometimes appliances. A lot of times when people move from a normal apartment and move into a home, one of the biggest shock factors they have is that they don't have furniture to fill the entire home. Anybody who's been through that understands. So furniture, near future repairs, sometimes you may purchase a home that has a roof or a HVAC system that's at the end of its life expectancy. Those are things that you'll need to consider. Window coverings, if you're purchasing a new home, that's one of the things, they don't put blinds or window coverings on them, and sometimes people feel like they're living in a fishbowl. So window coverings can be expensive depending on what you're going through, so those are some things that you need to look at. Also, a condo or a single family home, depending on the type of home that you purchase, the yard work and how much the tools are going to cost to be able to take care of the yard. So those are some things that you'll need to contemplate as you move forward with a specific home that you're looking to purchase.
Okay. I'm going to have you go back one, James. I'm going to ask a question. Taylor, is there anything that we can do to help cover closing costs? We get that question a lot. So what are some ideas or options for buyers that can help them cover some of the closing costs?
Yeah, there's a couple of different things that we can be able to take a look at. So one of the first things that we talk about when we're starting to go through the process is talking with your agent, because you can be able to ask for a seller to contribute money towards your closing costs. It's a very, very normal thing to have as part of the negotiations, to ask them to cover some of those costs that you have with that. Also, if you know that you're purchasing a home that's going to have near future repairs, we can actually be able to increase the interest rate to pay for some of your closing costs. You'd be surprised at how inexpensive the rate increase for 1/8% or 1/4% could be, and how much money you could be able to get back from that. It's a very, very simple option. We do it quite often for people. So we can be able to look at a lot of different options to be able to get the most money in your pocket so that you can be able to do what you're looking to do.
Great, thank you. So we're going to briefly cover construction loans. And when I say brief, just a few things. When you're buying a home and looking at purchasing a home from an existing builder, someone of the bigger builders in town, Destination Homes, Ivory Homes, D.R. Horton, those are the bigger builders. When you're purchasing a home from them, you actually don't need to be concerned about a construction loan. When we reference the construction loans, those builders provide the construction for you, so you don't have to worry about any of that process. What we're looking at on our construction loans are, if you're looking at building a custom home, that you've found a piece of property that you want to go ahead and work with the builder and design the home, or put together a set of plans and a cost breakdown, we offer financing for that, and we actually will go up to 95% of the value or cost, whichever's most limiting. Now, these are restricted to single family, or to, your primary residence or a secondary home. We don't allow investor homes on these. We do offer two different programs on this. We do a single closing or a two-time closing, and it really depends on what your loan amount is, where you fall within those two options. And if you have questions on those, the most important thing I'd suggest is just reach out to us. We'd love to discuss those in more detail. But for this purpose, we're just touching on it briefly so that you know that those are options that we have available, just in case you're interested in that.
Okay, so one of the reasons that people will sit down with us and ask us why now, one of the reasons that we go through is just to look at a case-by-case scenario. But when you're looking at why you'd want to purchase a home right now, everybody's situation is different. And so what we can be able to go through is we can be able to look to see how much you qualify for right now. We can be able to look to see what your interest rate would be right now. When we're looking at 1 year into the future, 6 months into the future, there's variables that are part of the equation that we don't have the answers to. So when we talk to people about why now, when to purchase a home, we can actually go through and talk to them about how they could be able to qualify and what they can be able to qualify for right now. I always tell people, if you're thinking about buying a home, if you're thinking about refinance, if you're thinking about anything to do with the home, just give us a call and give us 5 minutes to kind of go through some scenarios with you and see if the conversation needs to move forward even more from that point on. It's not going to hurt you to be able to go through and just talk to us and see what we can be able to do. Our time is your time, so we can be able to help you. There's a plethora of mortgage consultants available so that you can be able to talk to us at any time and answer any questions that you may have.
So another reason, we have a new program that we are offering especially for first-time home buyers. And I'm going to pester, and we're going to go through a few of the things, but I'm going to pester and make Taylor go through a couple more of those things on the first-time home buyers program.
So we introduced a first-time home buyers program around the first of the year with 100% financing available. If you purchase a home at $300,000, we can go up to a $300,000 loan amount. It's very, very beneficial for a lot of our members because sometimes it's difficult for them to be able to save money. Making their rent payment is not difficult, so they have good credit, but to be able to save the tens of thousands of dollars it may cost to be able to purchase a home can prove to be difficult. So we were able to secure a small portion of funds throughout the credit union so that we could be able to have this as a limited time for people. So the 100% first-time homebuyer program, we can be able to do a loan up to $453,000. It is considered a conventional loan. The minimum credit score you have to be able to use this program is a 680. Both borrowers or any borrowers that are on the loan have to have at least a minimum of a 680 credit score for this program to be available. If you do not have a 680 credit score, we can look at other options such as an FHA loan. We can be able to do these on a 15 or a 30-year option. They do not. One of the best things about this program is it does not have mortgage insurance. The rate is a little bit higher to be able to have this program available, but you're really paying mortgage insurance, or excuse me, you're paying principal and interest, you are paying taxes, and you're paying your homeowner's insurance. So it's a program that you could be able to get into with a limited amount of money or no money so that you can be able to purchase a home.
Great, thank you. So we're going to go into covering some information that you'll need to know on the real estate side and just kind of what you can expect with the process. One of the things that's really important when you start the home search is to have a website that you can go to without having to be hounded and worry about that follow-up hounding. And we offer that to our members. If you look on our website, which I know that you've all been to our website, if you go under the mortgage section, under the first mortgages tab, the first mortgages tab actually has a thing where it says search for homes now. And that website is updated on a regular basis. It's live updates. So if a home hits the market, it's updated immediately. It also will send you out, if you register, it will also send you out a notification for new listings. If you are interested in following and tracking, it'll get you information on those. It also updates you if homes have gone under contract or sold, or if there's been price reductions. Don't we all wish that that was the case in this market right now? But it really gives you an opportunity to fine tune it the way that you want it. So you can go in and identify how many bedrooms, how many bathrooms. You can customize it to you, and then you can save that search criteria so that when you visit back, and all of this information is just courtesy of you being our member and being able to go ahead and access that. So we want to make sure that you take advantage of that.
All right, now we're going to talk about making an offer on a home. When you make an offer on the home, it's your way of being able to tell the seller that you are a serious buyer. And so one of the things that you'll do when you make an offer on a home is that you're going to need to put a small amount of what they call earnest money down. And this dollar amount is negotiable. It can be it range from, we've seen as low as probably $500 as the lowest amount, up to $5,000. This part is used towards your down payment when you go through, so it's not money that you're losing. So it's part of your down payment. So it just shows your seriousness and to be able to purchase the home. You can be able to get that money back once you make an offer on the home. There are protected deadlines so that you can be able to get that money back if the home is not exactly what you think you're buying or what you want to purchase. What happens with the check, earnest check, is that it's deposited by your real estate agent into a brokerage account, and it is set aside. It's not used for anything. It's just held there as a good faith that you're going to purchase the home.
So it's really important when you get going that you sit down and review with both your real estate agent and your loan officer, review information, review the purchase price, make sure that you're looking at that. The real estate agent is going to go through and look at comparables in the area, look at market trends. He's going to look at what's going on in the overall market to help you make sure that you're getting the very best deal and offering a fair price on the home. You also want to know the purchase prices that you're looking at so that you know exactly what your amount of your down payment is and that you know what kind of a program is going to work best for you. That's going to be our responsibility, is to go through and give you lots of options, see what works best. We'll identify where the down payment is actually coming from. So if it's a gift or if it's actually savings, we'll identify those and help you pick a program that's going to be best for you. And then, like we mentioned before, we're going to go through in detail and give you a breakdown of what you can anticipate once you're all closed and living in the home, what your monthly payment is going to be. So principal and interest, the taxes, your homeowner's insurance, and if you do end up purchasing a home that's in a homeowners association.
So all of this stuff that we're talking about here with the purchase price, down payment, monthly payment, and closing costs, these are things that we'll go over with you before or during the application process. So when you start to go look for a home and when you start to make offers on the homes, you'll have a really, really good idea of what program you're going to use. You'll have a good idea of what your payment's going to be on the home that you're selecting. These are all things you'll go into with your eyes wide open. There shouldn't be a lot of concern. There shouldn't be a lot of unknown when you're at this stage with the home that you're selecting on how much you're going to be paying and what program you're going to be using.
That's a good point. So there are a lot of things that you can ask for in the process. You can ask for anything that you see in the home. Sometimes sellers are not willing to part with them, but you're welcome to ask for them. But we will have a designation between things that are private property and things that would normally be included with the home. And so those are things that would be addressed between you and your agent, and then the agent would present to the seller. But if you do see something, if you see something in the yard, maybe the yard has a really nice jungle gym for the kids or something, a spa, you can ask for those things, and those things can be included in the overall purchase. But some have to be handled inside the transaction, some have to be handled as private property.
So when you're going through this process, your mortgage officer, your realtor, and yourself need to act as a team, and so that you guys are all on the same page and you're comfortable with the entire process. When you go through and you make an offer on a home, talk to your agent about the things that you're expecting and ask them questions if this is going to be included or this isn't going to be included. Sometimes there's very small things that are important to the seller, but sometimes maybe their kitchen dining room table, maybe those bar stools, they don't really care about those things. So you can be able to go through, know it's a negotiation process. You can be able to ask for things, talk to your realtor about it. Just make sure that you're comfortable with the offer that you're making and you know what's taking place. All right, so one of the things that a lot of times you will receive when you purchase a home is a home warranty. Before you go look at the home, you can actually ask your realtor, is a home warranty included in this home? I would, a large portion of the time, a home warranty is just a given that it's going to be there available. So The realtor or the title company will have a preferred company that they go through. There's 2 or 3 main companies here in the state of Utah. Landmark is usually used the most that they have, but there's different packages that are available. They have 3 or 4 different price points that range from $340 to $450. They can be able to cover some items. Some of the lower packages don't cover other items, and you can be able to look through it. You can actually add money to it if they're only giving you $340, but you want the premium option. You can talk to the escrow officer. We can talk to them at closing about that. So most of this stuff will cover the systems for the 1 year, so you feel comfortable with the home that you're purchasing. So you're not buying a home and then all of a sudden you have to buy a $2,000 refrigerator after because the refrigerator breaks down. So this is something that's available for you. It covers most items inside the home, and it's not something that's typically negotiated upon because it's just going to be part of the deal. So you can ask your realtor before you even go look at the home, does this home have a home warranty available for it? And it'll be in the listing if it is or is not.
Okay, so there are 4 key deadlines in the contract, and we're going to just briefly describe them, but we're going to go in detail in each one. So the first deadline, these are all relative to the overall transaction and then also to protect your earnest money. The first deadline is the seller disclosure deadline, and that's typically about 3 to 5 days out. Second would be due diligence deadline, about 10 to 14 days out. Third would be finance and appraisal deadline, about 21 to 30 days out, and the settlement deadline of 30 to 45 days. Now, what you need to know on these is this is just an estimate. Sometimes you'll find in this market, especially the way that the market is right now here, especially in Salt Lake County, these deadlines get shortened. And so you may be dealing with deadlines, the finance and appraisal deadline that's somewhere between maybe 2 to 3 weeks instead of 3 to 4 weeks. And every property is different. So just know that we're trying to give you an idea of what these deadlines are, what you can anticipate, but know that there is a variable with market conditions.
One thing on the deadlines that they have is that everything is negotiable. So one of the things that the agent can be able to do is that they can talk to the seller's agent and find out what's important to them. And so maybe that they are moving out of state and a short time frame to be able to close is very, very important. Maybe they haven't found another home yet, so it isn't as important. You can be able to go through and have your agent do their due diligence and that, just ask them questions to make sure that your offer is being tailor-made to what the sellers want so that your offer can be stronger. Okay, one of the 4 items is the seller disclosure deadline. It's the first item that's on the real estate purchase contract. There is a package of papers that the seller has to fill out, and they give those to you within the time frame that is listed there. They'll go through and they'll ask questions about the home. Some of the ones that come to mind: has the home ever been broken into? Has there ever been a fire? Has there ever been a plumbing leak? They go through and they talk about those things. It's your protection. You go through the seller's disclosures and read it, and to make sure that this is a home that you want to take the next step in. So you can be able to go through and look at the answers that they give you so that you can be able to know what you're purchasing in that home.
So this is really your very first opportunity to counsel without any risk of losing that earnest money or any risk of not getting that money back. The second deadline is the due diligence deadline, and this is typically about 10 to 14 days from going under contract. And during this time period, this is when you're going to have an inspection done on the home. If you're interested, if you want to have an inspection done on the home, this is going to be your responsibility to cover. This is not something that the seller provides or covers expense for. These inspections run anywhere from $300 to $500. And you can do any other test that you're interested in. If you're worried about some other things, this is where you would have some kind of either meth, radon, mold, those types of tests.
One of the things that they have with the inspection that I always recommend is make sure that you get an independent inspection. A lot of times people will go with the inspector that the financial institution or that the realtor, and it's mostly the realtor, prefers. While that's not a bad thing, I always recommend that you get somebody who's completely independent, so you know that you are getting an inspection done on the property that has absolutely no ties to somebody who is actually getting the deal sold. So it's something that you can be able to do, just an added level of protection for yourself.
That's a good idea. During this time, if you do an inspection and you find that there are things that need to be completed on the home, you can go ahead and request that as part of the transaction. You can request that the seller complete repairs or make a price adjustment. Those are all things that are typical with this process. And at this point, if you just simply have a change of heart, if you just simply say, this home, we've decided that this home is not for us, this is really your second opportunity to cancel without any risk of losing your earnest money.
The state of Utah is very, very seller friendly. So, I mean, even if you are bad juju or something like that, I mean, you can really be able to get out of the contract for a variety of reasons. Just make sure that you're comfortable throughout each step here so that you're purchasing a home that you definitely want. All right, so the next one is the financing and appraisal deadline. This is kind of the end of the line for your earnest money to be able to be given back to you. There's a specific date in there that the financial institution has to have the loan in final approval. And so we will have gone through, the appraisal will have been done, we will have verified income, employment, verified down payment. The price can be negotiated up to this point, but once you reach this point, you're 2 feet in on being able to purchase the home and not lose your earnest money. So when you're going through the financing appraisal deadline and we're getting up to that, that's where we'll have a conversation with the realtor. We'll have a conversation with yourself and make sure that everybody's on the same page in getting you ready to be able to get to settlement. One of the things that may happen in this time frame, because it's difficult for us to possibly be able to get some documents, maybe we're having a hard time getting something from your employer that we need, we can be able to extend these deadlines throughout the process. One thing that we want to do is make sure that we're working with everybody so that we can be able to give them a heads up, probably a week in advance, that we may need a couple extra days on the financing and appraisal deadline because we're having a difficult time getting something. So this could be for a variety of reasons. One of the things that we had last fall was when the hurricane flooding was happening down in Houston, we had to get verification of employments from employers that were in Houston, and obviously they were not up and running. So these are things that we can be able to not really foresee, but when we start to go through this process, we can be able to say, hey, we're having a hard time getting this, we're having a hard time getting that. It's very, very rare, probably less than 10% of our deals where we have to ask for this sort of extension. But we will be in communication with you, communication with your realtor to make sure that there aren't any surprises where at the last minute we're asking for an extension.
Okay, and the last deadline is your settlement deadline. This is typically everything is done at this point. You've got a final approval, a formal approval on your mortgage loan. You've got everything taken care of on the home, any repairs, any negotiating, and you're ready to go ahead and settle all of this. It's typically about 30 days, maybe 30 to 45 days, depending on what the status of the home is. And at this point, you're going to do a final walkthrough about a day or two before you sign your closing documents. And you're also going to be receiving a copy of those closing documents in advance. A closing disclosure that tells you exactly where you're going to be on your loan. It discloses the interest rate. It discloses what your payment, what your out-of-pocket expenses. All of those things are going to be disclosed to you prior to you going to the title company. At this point, you're ready to go ahead and sign your closing documents. You'll go to the title company. That process takes about 45 minutes to an hour, depending on how many questions you have. You'll need to provide 2 forms of identification. We like them to be 2 photo identifications, so your driver's license, and if you have a debit card or a Costco card, those things work with your identification on them. And at this point, this is when all of the final transfer of monies happens. So the rest of the down payment and closing costs, everything will be finalized at this point. Now, if you have your accounts with us, we work with you to transfer those over just between accounts. If you work with another financial institution, you may have to wire the funds. But all of those questions will be answered between your loan officer and also the title company, working with all of those.
So one of the things with the settlement deadline, 3 business days before, you'll actually get your final numbers. So you'll have a perfect idea of what you're going to be going to closing with. You're going to have an exact payment that you're going to be paying. You'll have all of those figures before you go in. Settlement's really just about going in and signing the final paperwork. You should have all the key pieces of information before we get to settlement so you're comfortable with the transaction. Your loan officer from the credit union will be at your settlement. Your realtor will be at the settlement. So all the key players will be there to answer any questions that you may have so that you're comfortable with the closing process.
That's a good point. So typically when you go and sign your documents, you sign everything, and then within 24 hours, it's recorded, and that's when you would receive your keys. And at that point, that's when we all celebrate with you, and congratulations, you've sold you've purchased a home. So I know that you've got questions, and so we're going to give you just a minute to go through, but the last thing that we want to show you is, you know how to contact us, but this is just an overview of the consultants that we have. We actually are up to 8 consultants now, so there's 2 missing on this, but that's my bad for not updating. But we have consultants throughout the valley, and furthermore, if you do have questions and you want to meet at a branch that maybe there's not a consultant, just let us know. We're willing to travel at any branch that's convenient for you. That's the most important thing. I know you know how to find us. You've come to the website, but this phone number, the 801-481-8840, actually rings at each one of our desks. And so at any given time, you can reach one of us. If there's somebody specific that you would like to talk to, all you need to do is just ask for them at that point, and we'll transfer and get them on the phone. But just know that we're here to help you and answer any questions you may have. We're going to address some of the questions that we've had. One of the questions is, do you lend outside of the state of Utah? I'm going to have Taylor answer. Do we lend outside of Utah?
Unfortunately, we're not allowed to lend outside the state of Utah due to us being a credit union. However, that doesn't stop us from helping people purchase homes outside of the state of Utah. So one of the things that we can be able to do for people is they can use their current home that they have and use the equity in that home to be able to purchase other homes. It's a normal process that we go through to be able to help them with that. So if you're looking for a home outside of the state of Utah to purchase, give us a call and talk to us. We can just run through a quick scenario and see if it's something that we can be able to do. If you're just looking at purchasing a home and you don't own another home, unfortunately, outside the state of Utah is not something that we can be able to take care of for you.
Okay, next question is, what is the lowest credit score that you could be, or what's the lowest your credit score could be and still qualify for a home loan? It's a good question. Do you want to answer?
So we have a couple different programs that are available that one of our investors has. I believe it was a 560 that we have available to people now. Now these are on a case-by-case basis. We can be able to do FHA loans between 580 and 619 on a case-by-case basis. But if you have a 620 or above, most options are going to be available for you. So 620 is the number to really strive for. If you're in that high 5, mid 5 area, it's very, very easy in a short period of time to get your score above a 620. All of us have extensive background on how to help build credit. So that's something that we can be able to do. But a 620 is going to be the minimum score that you want to stay above so that all products are available for you.
That was a good question, Mary. One other thing that I'll add to that is, like Taylor said, if you have a question, our job is to make sure and help you with every option that you can. So what we're going to do is, if you do have a lower credit score, we're going to provide you with options. We're going to run probably 3 scenarios and then give those to you, and also give you the option of working with you to try and help improve your credit and show you what that would result in with more scenarios with an increased credit score. So the most important thing is just reach out to us. It doesn't cost you anything. We can go ahead and pull scenarios for you and help you through that process. That's a really good question.
One of the other questions that we have is talking about down payment options that are available for people. So there's a variety of ways that you can be able to receive a down payment. You can be able to receive a down payment via a gift from a family member. You can borrow money from your 401k, and in some situations it's penalty free from the IRS, and we can be able to talk to you about those options. As we said, we have that 100% financing program available. If you are concerned in any way that you're not going to have a down payment, that's something we can be able to talk about, or we can formulate a plan for you with your current financial situation on how long it would take you to be able to save up a down payment. So we can be able to take 20, 30 minutes, go through everything and set up a plan for you, whether it's a 3-month plan or a 2-year plan, to really help you have a game plan so that you can be able to move forward with your dream of owning a home.
Those are good questions. So You need to know we're going to send a follow-up email. Each of you have registered. We're going to send a follow-up email at the end of this that will give you a link where you can go back and watch this. We've recorded this webinar for you. So you'll be able to go back and reference information and look into if you've missed a portion, if you missed the first part of it or what. And then you'll also receive a coupon that's good for $500 towards your closing costs. This is just our way of saying thanks for attending and thanks for participating, and we really like to work with you. We're going to wait for just a few minutes more and see if there's any other questions come in.
One last thing while we're waiting, we are here to be able to help you in any way that we can. I hate when people tell me that they've waited a little bit to be able to come meet us because they've been either embarrassed about their situation or they didn't think that they can be able to purchase a home. Don't assume any of those things. Even if you've talked to somebody in the past, just give us a call, or you can be able to go onto our website and find our email addresses so that you can be able to ask basic questions to us so that we can be able to help you formulate a plan to be able to get into a home. We're here to help. There are times where we say you can't purchase a home right now, or the amount that you can be able to purchase isn't what you're looking for. At least we can be able to go through and answer all those questions for you. So don't assume, don't be embarrassed. Just give us a call. Let us take some time over the phone. We don't need to pull credit to do this. We can go off of credit scores that we might have on file here at the credit union, or if we just ask you what your credit score is. So we can be able to go through all of those options with you without having to pull credit. So we can just be able to get you the knowledge that you need so that you can be able to make the best decision for you and your family.
Okay, it doesn't look like we have any more questions, and so I'm going to go ahead and we'll finish up. Thanks again so much. We appreciate you attending. If you do have questions, reach out to us. Again, you can contact us at the 801-481-8840, or you can find the individual contact information. Again, Taylor Riley is the one, you can see him here. Taylor's the one that's joined me today, and my name is Jennifer Young. We look forward to working with you. Thanks so much.